Kalilah, what are you doing? What are you doing?
Well, I found this money that I had saved a long time ago. You ever see that old $20 Jamaican bill, paper money?
But that don't worth anything now.
I know, right? I should have invested it. Imagine what this would be worth so many years later. I'm Kalilah Reynolds, and it's time for another episode of Money Mondays JA. Money Mondays JA is brought to you by Proven Wealth. Visit provenwealth.com to speak to an investment advisor today, and follow We Are Proven on social media. And Bulwark Insurance Agency. Looking for affordable insurance? Visit bulwarkja.com. Follow them on social media at official bulwarkja. Before we get started, don't forget to like this video, subscribe to this channel, and click the bell icon so that you can be notified whenever there's a new video. Also subscribe to my newsletter at KalilahReynolds.com/newsletter and check out the full website where you can read a transcript of this episode. Save for a rainy day, they always say. This means putting money aside for emergencies or for a future purpose. Savings is income that you don't spend. Methods of saving include putting money aside in the bank, a pension account, or cash, the good old mattress, right? Most people save for things like vacations, education funds for their children, or for retirement. Financial institutions offer a number of different savings options. These include basic bank savings accounts, which offer the lowest interest rates, but allow you to access your money easily. Then there are credit unions, which are owned by their members and may offer higher interest on savings. You also have automatic savings plans that allow you to automatically transfer money from your checking account to your savings account every month. Then if you want to save for a long period of time, from several months to several years, you can take out a certificate of deposit, CD. These often yield the highest interest of any savings option offered by banks, but they make it much harder to access your money. So what are some of the advantages if you choose to save your money? Firstly, there's a low startup requirement. Many savings accounts can be started for just 2,000 Jamaican dollars, so you don't need plenty of money to start. Secondly, you have easier access and availability. Savings accounts are easy to open, and you can withdraw and deposit money anytime, within limits of course, through ATMs or using online banking. Thirdly, it's a liquid asset, meaning it flows into your pocket easily. Since savings accounts deal in cash, you don't have to worry about selling investments or making other complicated moves when you're ready to access your money. But what are the disadvantages? Firstly, low interest rates. Interest rates on savings account in Jamaica range from 0.05% to 2%, and that rate is based on how much money you put in your savings and the type of savings plan that you choose. So the more money you save, the higher the interest rate will be, but the earnings are still very minimal. Secondly, access and availability. Yes, I know this is also on the advantage category, but being able to easily access funds can make long-term saving difficult. You know, when you put money aside and you say you're not gonna touch it, but then it's there, so you touch it. Those shoes were just too cute and they were on sale. So really, I was saving money, right? Because it was on sale. Well, now the third disadvantage is inflation. Prices change from year to year, and inflation is when prices increase over time. And as a result, your money does not go as far as it once did. If your savings account doesn't pay a competitive interest rate, and realistically most of them don't, inflation could be eating up the value of your earned interest, leaving you with an account balance that may be worth less in a year or a few years if the purchasing power of the dollar goes down. So for example, say you deposit $1,000 in a savings account with a 0.09% annual interest. That means you would have earned 90 cents in interest. But if the inflation rate is 4%, which is about where it is now in Jamaica, what you could have bought with $1,000 now costs $1,040 a year later. So even though you've earned interest, you're behind due to inflation. If you're one of those persons who try to save money under your mattress, by the time you pull out that cash, its purchasing power is likely to have gone down significantly. And this means the full potential of your money isn't always realized, especially when compared to other investment opportunities. Now, speaking about investment opportunities, let's talk about investing. Investing is buying assets such as stocks, bonds, cryptocurrency, or real estate with the expectation that your investment will make money for you. So what are the advantages of investing your money? Firstly, there is the potential for greater returns. Some investments can triple or quadruple your money or more over time, or even within very short periods, as we've seen before with stocks like GameStop. Investing in stocks, for example, offers the potential of an average annualized return of about 10%, so well beyond inflation. Secondly, investing is a great way, like I said, to beat inflation. Historically, since investments tend to have higher returns, they often allow long-term investors to beat annualized inflation rates. Now, inflation, like we mentioned, is simply a measure of price changes for goods and services. Jamaica's inflation rate for the past 12 months is about 5%, and this means the average cost of stuff in Jamaica rose by 5% in that time. Now, if you're making 10% on stocks, then you're beating inflation. But if you're earning anything less than 5% by saving in a bank, then inflation is beating you. And your money is worth less at the end of the year than when you put it in, making it much more difficult to meet your financial goals. Imagine you're saving towards a house, but as you know, house prices keep going up and up and up and up and up and up. With regular savings, you don't really stand a chance. Now, thirdly, investing offers more than one way to make money. Some investments, like stocks, provide cash flow through dividends as well as revenue from sales if investors choose to sell their stocks. Additionally, with real estate, persons can resell the property at a profit or choose to collect rental income. So whatever the case may be, investments often provide more than one way for your money to make you more money. Now, the major disadvantage of investing, however, is that it's riskier than savings. Savings are considered safe money, but there's no 100% safe investment. There's always the possibility that you may lose money. Real estate can become less valuable, though it's not common. Cryptocurrency prices can swing wildly, as we've seen recently, and stock prices fluctuate based on everything from how the competition is doing to public confidence in the market. So I thought that having too much savings was stupid until COVID, when everybody was trying to sell their stocks at the same time and prices crashed 30%. So if you were in a situation where you lost your job due to COVID, right when you needed that money, you would have to take 30% less than you put in. So there is some comfort in the safety of cash savings. The next thing is investing can be an emotional roller coaster since markets are volatile. For example, you just saw what happened with Bitcoin. The value fell by 30% in a matter of days. In terms of stocks, sometimes people buy high and sell low out of fear, but investment risk can be decreased by diversifying your portfolio based on your financial goals and maybe not monitoring them every single second of the day. Just saying. Lastly, profitable investments can be costly. There's a saying, good things not cheap and cheap things not good. While this may not always be the case, when it comes to investing, some of the better opportunities may cost you. Investing in real estate can be costly, and the same can be said if you want to invest in certain cryptocurrencies or stocks, but the rewards are often significant. A piece of advice that always comes in handy: do not put all your eggs in one basket. Some investments that may appear to give high returns may also come along with higher risk. So it's important that you research before making decisions involving your money. So here's another practical example. If you deposited $2,000 in a savings account at 3% annual interest, it would grow to
$3,200
in 20 years before taxes. That same $2,000 invested in a stock mutual fund, earning an average of 10% a year, would grow to $13,455 in 20 years before taxes. So making a choice between either saving or investing will depend on your goals for your money and your risk tolerance. I personally believe that it's better to strike a balance between risky and safe by making researched investment decisions instead of saving everything. This way you can just see how much growth potential your money has. A formula used by a lot of successful people is S equals I, that is savings equals investments, meaning if you're saving money, put it into investments that can earn more money. That's it for this episode of Money Mondays JA. Now here's what's coming up on Taking Stock. Outside is open and Dream Weekend wants to make a comeback in August, but will Andrew free it up? And would you even go if they get the go-ahead? I'm talking to Managing Director of Dream Entertainment, Scott Dunn, about their proposal to pull off the summer's biggest party series.
Estimated that Dream Weekend brings about $4.3 billion into the economy.
And later, the analysts weigh in on the latest market developments. Real estate company First Rock Capital Holdings is looking to rebalance its portfolio.
And by rebalance, we mean they're reshifting the weight of the assets that they own.
Statin's official growth numbers are out. We'll tell you which industries and companies you should be looking at.
We're seeing in terms of the goods producing sector, which includes agriculture, manufacturing, construction and mining, that those areas are actually seeing more growth than for the services.
And overseas, Coca-Cola is back to pre-pandemic earnings.
Coca-Cola has a strong portfolio, so it's more than just a soda company. They sell water, they sell many other beverages such as tea, people like iced tea. So
now don't forget to like this video, subscribe to my YouTube channel and sign up for my newsletter at KalilahReynolds.com/newsletter, where you can read a full transcript of this episode. You can click the link in the description box below. Also follow me on Twitter and Instagram at Kalilah Ray and on Facebook at Kalilah Reynolds Media. If you're into podcasts, find us on your favorite podcasting platform, including Spotify, Apple, and TuneIn Radio. I'm Kalilah Reynolds. Let's get this money. Money Mondays JA was brought to you by Proven Wealth. Visit provenwealth.com to speak to an investment advisor today and follow We Are Proven on social media. And Bulwark Insurance Agency. Looking for affordable insurance? Visit bulwarkja.com. Follow them on social media at officialbulwarkja.
Let's get this money.